Senior columnist for Yahoo Finance, Rick Newman, joins me now. So, Rick, the stocks have been wavering between losses and gains today. How are investors feeling, and what are really the factors playing in here?
Investors are probably happy this week is over. This was supposed to be a quiet week, and it turned out to be anything but. We had a giant loss on Christmas Day. Then it looked like an even bigger loss the next trading day, December 26th. And that turned into a gain, a huge gain, actually. And now we're actually ending the week slightly up. But it's just been really dizzying, and the volatility here is not normal. So I think what this is telling us is that there's a real battle between pessimists and optimists over whether we're going to have a healthy economy with strong corporate profits in 2019, or we're going to have a faltering economy with profits that are a lot weaker than people expect.
And we're just looking at a graph here, which is charting just this week alone of how stocks have fared just for this week. How much of an impact do you think the government shutdown is having on the markets? Can you tell it all?
The shutdown does not directly affect financial markets, but it is a factor that is probably affecting confidence a little bit, both at the consumer and at the business level. I mean, you got to remember, a lot of people are away for the holidays and aren't really paying attention. That will change next week when people come back if the government is still partially shut down. But I think you can look at a bunch of things that are just kind of piling up here. I mean, the biggest political factor weighing on stocks is probably still the Trump trade war with China, those tariffs that are raising costs for consumers and businesses. You can layer on top of that, the Federal Reserve is raising interest rates. You've got President Trump browbeating the chairman of the Federal Reserve, Jerome Powell, saying he should be stopping this. So there's confusion over what the policy is there and how that's likely to change in the future. And then you had this very weird spectacle earlier this week of the Treasury Secretary saying, hey, I called the CEOs of the big banks to ask them if they're solvent. And they are. And people are suddenly looking around saying, why is he even bringing that up? Yeah. I mean, does he know something we don't? Is there some problem here we don't know? So you put this all together, and you do get a picture that there's not a great comfort level that Washington is really on the ball.
Yeah, that was a very odd moment with CEOs. You know, there's been sort of these wild swings, as we've mentioned, in the stock market recently. Can you sort of break down what's causing this unpredictability on Wall Street just over the past few months?
Yeah, it's those geopolitical and political factors we just talked about. At least as big a factor, however, is just a concern that the best of economic growth is behind us, and that we're going to have a slowing economy and slowing corporate profits in 2019. Now, you've heard the word recession in some of the headlines. We are almost certainly not heading for a recession in 2019. And there's actually been a divergence between a stock market that has done very poorly for the last 3 months and an economy that's still looking good. I mean, we just got through the holiday season. Holiday spending was up around 5%. That's a good number. So that tells you consumers still feel pretty good. However, we did see a decline in consumer confidence just this week that is probably related to these headlines. People are hearing about the stock market, and these things can become reinforcing. And I think something really important to think about here is that we've had a change in momentum. So about a year ago, business people were pretty excited about the upcoming 12 months. They were looking forward to that tax cut. They knew their profits were going to go up. They thought growth would spike in the coming year. And now we've been through that year. And the forecast for the next 12 months, they're not terrible, but it looks like the best might be behind us. So we've kind of got a momentum turning downward. And I think that is why pessimism has been a dominant factor in the stock market the last couple of months.
I know we always wish someone had a crystal ball and could tell us exactly what the trajectory would be over the next 6 to 12 months. But can you make any predictions of how this might continue to play out for Wall Street in 2019, just based on some indicators that you might typically watch?
A few things. We're asking this question all the time here at Yahoo Finance. So there are not very many people saying 2019 is just going to be a terrific year for stocks with a 15 or 20% gain. But we also don't have too many people saying it's going to be a wipeout in 2019. So one of the patterns we've seen is when we were in the middle of hearing corporate earnings, that's a period that lasts for about 6 weeks, once a quarter. The market generally does pretty well because it pays attention to the real facts of what's going on at companies. And that news has generally been good. I mean, corporate profits have been strong, and we could get that again when we start to hear earnings in the first quarter and then in the second quarter of next year. Then when we have those gaps between the earning periods, that's when the geopolitical headlines and the Trump tweets and, President Trump just had a phone call with President Xi Jinping of China. Did it go well or did it go terribly? You know, just trying to figure all this out. That's when that is what's moving the markets, and that tends to produce more gyrations. So my guess is we could see the market drift up a little bit in 2019. I will put this out there. One thing that would actually be a terrific relief for markets would be if President Trump wound down this trade war with China. If he made a deal and he told everybody, hey, guess what? Great news. I got the greatest deal of all time with China. Even if it's not the greatest deal of all time, we're going to make a deal. We're going to get rid of these tariffs, and we're going to kind of go back to business as usual. If he did that, markets would cheer. I think you could easily see markets up 5% in a day and drift up more than that. I don't know if Trump's going to do that, but he does have that in his back pocket for 2019.
People will be watching for sure. People want to see some sort of resolution there. Rick Newman with Yahoo Finance. Rick, thank you so much for joining us.
Thanks. See you.